Hi everybody, my name is Jeff Fowler. I'm the president of the Apartment Owners Association of California. It is so good to have you with us today. We have a group of insurance experts. They are executives in that industry, and we're going to have an informal panel today, ask some questions, some guided questions, and let everybody share. And we believe that this is going to be a valuable resource for you, so definitely stick with us here. And yeah, just to let you know, AOA is one of the largest individually organized groups of apartment owners here in the state of California. We have over 20,000 members, and one thing that is really important, I think, is taking political action. And we have a Take Action Tuesday once a month. We're trying to mobilize people to plant seeds, to share ideas with their council members, their county board of supervisors, whoever it may be that represents them, that we need to influence. And so that's something that we do every month. You can go to the political action page to see more about that, and specifically there's form letters and ways to communicate with people. So we definitely want you to take a look at that. And there was a meeting yesterday. LA City Council had a meeting, and they're looking at approving. They did approve, and they will have a final meeting where they're going to look at ending the moratorium. But the big thing that needs to change with what they have there is that they don't want any rent increase until 2024, which is just devastating. And so you may have written once, write again about that, and just say, hey, how about we take your whatever raises you've had since 2020, how about we take all those away and retroactively take those away, and then also freeze your wages? How about we do that? And so there needs to be a little bit of the golden rule applied. These people need to know the golden rule, and they need to treat other people the way that they would treat themselves. And so definitely get the word out to them. And yeah, so here we go. What we're trying to do here at AOA is help you succeed with your rental property. So part of that, when things are blocked by politicians in this way, it requires that political action. And then there's other things we can do. There's forms, and even just recently we're updating the 3-day notice. So that's something that'll be updated even by today, I believe. There'll be a new one up there. So always use the newest forms. And anyway, there's always having content. So I want to encourage you to subscribe if you're on YouTube, and really subscribe to the e-newsletter. It's free. Even if you're not a member, you'll get that. And just things that are happening, you'll get those happenings and updates, and then also just announcements of different events that we have. And next week we'll have Dennis Block. He's a eviction attorney. He'll come and speak, and he'll talk about the title is Never Let a Good Judgment Go to Waste, and that's about how to abstract a judgment. And so you'll want to tune in for that and listen to everything. We have Kimball Tyree St. John coming the week after that, and talking about a writ of execution and how that is, how that can benefit you besides just the collection part of it. So those are two. They're back to back. It's almost like a two-part series in a sense, and they're going to be shorter in length, but it's valuable information that you'll want to hear. And of course, we have the $1 Million Trade Show coming up in Long Beach on the 27th of October. So circle your calendar for the end of the month there and show up. We're going to have a lot of good speakers, including Anthony Miller, who's with us today, along with Dennis Block, who's with us next week, and Tracy Merrill the week after that. So some of the speakers, they're not sharing the same thing that they're speaking on at the show. So you'll want to tune in and kind of get a taste of what they're like, and then you'll want to go to the show because they'll have other gems that they're going to share with you. And so just a shout out to GSI, Golden State Insurance. The AOA Group Insurance is with them, and they're sponsoring this event, so a big shout out to them. And Anthony Miller and this group, they've been nationally awarded. They've been named the top apartment specialists in the United States. So these people, we picked them for a reason, and they do a great job, and they do it at a low cost, and just kind of like the AOA. There's other associations that are out there they're more expensive, so we try to be a lower cost, and their insurance lower cost, yet and you're not sacrificing anything on the quality side at all, I believe, and you'll know what you're getting, which I can't say for every single insurance company out there. So Anthony Miller, he's going to facilitate this discussion. He's a graduate from Notre Dame, and he is a landlord himself. And so, Anthony, why don't you go ahead and take it away?
All things apartment owners and insurance, one of the most exciting topics ever, right? Insurance for apartment owners and landlords. Well, I bring you to today. My name is Anthony Miller, founding partner and with GS Insurance Solutions. We specialize in apartment owners, landlords, real estate, really all things real estate. And so it was an idea of mine. This is something that we've wanted to do actually for years, which is put together the best of the best in the apartment space, specifically for apartment owners as it relates to insurance, just because this is such a huge issue, a huge price topic, depending on the demographic of your property, how many properties you have. And so what we did without further delay was we chose the best of the best. We have the big hitters in the space, leaders in the space, and we're fortunate. First, Sylvie Widjaja with Mercury Insurance Company, who specializes, obviously, as most of apartment owners know, you may actually be insured with them, and they have a huge penetration here in the state of California. And so we're just super excited to have you, Sylvie. We also have Andrew Grieco, which is, he is a vice president and team leader over there at RT Insurance Company. They are a program managing underwriter, which specializes in apartment owners, and they insure thousands upon thousands. So he has a very interesting and insightful sort of perspective on really all things apartment, real estate, commercial, mixed use across the board. And we also have Brett Davis, who is the Apartment Owners Association Insurance Program Lead. And he has been with us for many, many years, and is maybe your broker if you're in watching now. And we also have Robert Hess, who is the vice president and team lead of GS Insurance Solutions and specializes in real estate as well. So without further ado, we'll just get right into it. First and foremost, maybe we can just go around real quick, just kind of maybe expand who you are, who you're with, and what's your favorite thing about the company you work for. Maybe we'll just start in that order. So Sylvie?
Well, good morning. Thank you for having us. My name is Sylvie Widjaja, and I'm with Mercury Insurance. I am responsible and I lead the commercial sales development team across Mercury nationally. And I've been in the industry for over 18 years now. I did start when I was 2 years old. So wanted to make sure we clarified that. And in that 18 years, I've been blessed enough to be in all 4 disciplines of insurance, which is claims, sales, product management, as well as underwriting. I am a big fan of commercial. No offense to personal lines, but just really love commercial. And I learn something new every day, despite being, almost 2 decades in the insurance industry. I'm still learning something new every day. And it's just been an incredible journey. What I love about Mercury is the people. We are a very collaborative organization, and we really are a flat organization as well, which is very hard to say for an insurance carrier. Insurance companies, we love our layers. And I must say that in my experience, Mercury has been just amazing in really valuing each person's and each individual's voice, and allowing us to express and share new ideas. And I'm excited about today's topic. Y'all might have to stop me from talking because there's just so much information to share. And I think this is going to be a great session, and with some really great topics as well. So thank you.
Thank you. So excited to have you. It's just, we're so fortunate. So thank you, Sylvie. Looking forward to it. Andrew Grieco, RT specialty.
Hey, everyone. Thank you for having me. So Andrew Grieco, RT specialty, been with them for about 8 years now. I'm part of lead a team, one of the largest property teams within the company. And like Anthony was saying, we specialize in placing tons of habitational apartment units across the entire country. So we have a broad range and understanding of what every single geographic apartment complex owner goes through, and see what their pain points are. So we are specialists where we will break down the entire portfolio or the individual risk down to its core, figure out how to best place and find the best overall solution for each owner, because every owner is different. Not every single portfolio is the same, whether it's loss history, geographics, valuations, anything. So that's probably the best part about RT as well, is that we're able to help so many different apartment owners and portfolios in different ways, because we have the exposure across all different geographic components, and we're able to break it down. And overall, it's a very collaborative team across the nation. So whenever there is a situation where we do need, some extra hands or some insight, whether it's something outside of our control, like wildfire, or something inside our control, like attritional loss history, and maybe suggesting some risk mitigation techniques or other vehicles to help the client.
Awesome. Yeah, you guys are historically really anything hard to place. I mean, you guys can write really anything across really under the sun. But as of late, I think, would you agree that it's not just the harder to place risks, but now just with rates increasing, you guys are somewhat with some of the programs you have access to, writing some other sort of maybe things that could be placed in the standard market as well.
Oh yeah, a ton of that nowadays. That's why I was careful in saying not tough to place risk.
Right, I noticed that.
Yeah, because yes, traditionally that is what we handle. We handle the toughest to place risks, whether it's bad losses, tough geographic. But nowadays, just with a lot of the standard markets really pulling back on their reinsurance and just pulling back in general, we've been seeing a whole blend of a ton of opportunities. So it is
Beautiful.
tough to place. That is generally what we see, but it is a lot of the quote unquote benign risks as well, and the portfolios that the standards would see.
Wonderful. Well, thank you again for joining us. Appreciate it. It's a privilege. Brett Davis with the AOA Insurance Program.
Hey, everyone. Happy to be here. Brett Davis, account executive with GS Insurance. Been working with the AOA and GS Insurance for going on 6 years now. So if you have called the AOA requesting a quotation or have any questions in insurance, I'm most likely the person you've talked to. One thing about our company that I think that separates ourselves from other brokers is our responsiveness, up to us and the client managers. As far as certificates, we know those things are a bind. So making sure that those things get sent out in time is definitely something that's very important to us. And we look to fulfill your needs there. Apologize. I'm actually getting a call through the AOA right now. So my video is cutting in and out. So I'll probably be getting a voicemail from a client right now. So
thanks. Well, good. We appreciate you having you as well. Robert Hess.
Hi, all. Thanks for having me. Robert Hess, Vice President here at Golden State Insurance. I have about 15 or so years in the industry and really have focused on real estate, landlords, asset management companies the entire time, which has been great for me, just to help me to become really a master in the space. We know all markets. We know where rates should be, where values should be. We know the back end, what's important as far as service needs, certificates. So, that's kind of what we specialize in here at Golden State, which is really why I love the company. I mean, we have a great culture. Everybody's been here for a long time, working together. Everyone shares the same passion for the industry, keeping up with the markets, knowing which carriers are fading in and which are fading out. So, yeah, it's a little about me.
Good. Thank you for that. Appreciate it. We'll get right into it. And I'll kick it off. Really, just want to, because every insurance company decides to insure specific industries for very deliberate reasons, right? And I know that with Mercury, there's a very specific reason, and there's great reasons for why you guys are a leader in the habitational space, why you guys selected and have an appetite, and a great appetite, mind you, especially currently, and given the current marketplace, for habitational risk, for apartment owners, really across the board. Just as an open-ended question, and we'll go around, maybe starting with you, Sylvie, is why apartments? Why real estate?
So, good question. As you said, Anthony, Mercury has been a leader in California, especially on the personal lines space. And a lot of this is kind of was designed and birthed because of our insureds wanting to expand there and go into the commercial space and own apartments, because they already own a home and they own a rental property. And we thought it was a good opportunity because of our current presence in that space already. A lot of our insureds own both, are also our personal lines insured as well as our commercial lines insured. And given our expertise in the homeowners market in California, we thought that apartments would just be a natural transition, and then continue to expand on that as well, where now we do single family dwellings, multifamily dwellings, all the way to the small, to the medium size, to the large apartments as well.
Great. Yeah, no, and what we love about you, Sylvie, in dealing with Mercury, is that you have some creative underwriting where we can put, a number, if someone has, 50 single family homes and an apartment, we can put those all on one policy, which is really, really nice. And it's unlike, really, I think, any other insurance company really in the state that can do that. So there's some really interesting things that with blanketing limits that you guys can do. So it's thank you for that. No, that's a great. Andrew, maybe the answer is a little different, or maybe the question we can frame a little different, but why property? What is it? Because obviously you have a love for it. I can see it when we talk to you and we're dealing with accounts, but what is it? Why is RT such a leader, and what would you say the success has led to being such a leader in this space?
So it's all about understanding where the market's at, right? I think Robert was talking about knowing which markets are in and which markets are out. We are constantly out with multiple insurers and reinsurers, discussing with them, talking about their treaties, talking about facultative reinsurance, talking about the driving factors. So the more that we are out and about, really understanding how everyone's portfolio is running, we can then select which type of risk we go to different carriers with. So the more understanding where the market's at, the better that the more effective we can be in the market, which is, I think, sets us apart from most of our other competitors. We'll get into it, I'm sure, but understanding the reinsurance on our end, not just typical insurance, is crucial in apartment owners specifically, whether it's from a geographic standpoint or from a fire standpoint. Understanding how both are handled internally at these insurance companies really allows us to access the most competitive rates out there and the best coverage across the board. As far as why property, I was actually having a conversation with someone yesterday, and it's the tangible asset. Being able to look at something and you can see it and you can say that is what you're insuring. From a property standpoint, we can understand it better. It's not a slip and fall. It's more of taking a look at it and saying, okay, it's a wood building, the roof is updated. It's very tangible. It's hard facts. So understanding that, and then with the market, which ways the market sways, I think sets it apart.
Sounds good. No, I love that. Brett, Robbie, would you guys want to touch on that a little bit? I know for you, it's different, probably a little slightly different. anything you want to add from your perspective?
Just, when you get to know the market as well as we do, we have that ability to really step in and improve somebody's entire insurance outlook. I mean, if somebody comes to us with 20, 30 individual policies for different locations, we can get creative with that. We can step in, consolidate all those buildings, put together a blanket limit, improve coverage for them, and in most cases, save them, hundreds of thousands of dollars in some instances. So it's that ability to help people. I mean, I'm a landlord myself. I own a property, so it's a difficult time. Valuations are going up, inflation's going up, costs for pretty much everything is going up, and in this industry, as the rates climb, when you can really sit down with a client and save them money and improve their coverage, it's honestly a great feeling, just to know you're helping somebody out and improving what they do.
Nice.
Yeah, I think, Robert nailed it with the helping people is definitely one of the biggest benefits of working in the apartment insurance. And then also just know the knowledge of the space. I think, Sylvie alluded to it with Mercury and you as well, Anthony, is being able to have a carrier that can write 50 single family homes on one policy form, whereas some of our members call in and they have 8 different brokers, 9 different carriers, and being able to consolidate that for someone and help them out and kind of take out that headache is always helpful.
Huge highlight for sure. So as an apartment owner, and I appreciate you sharing that, Robbie, as an apartment owner, right? We're seeing rates increase, right? We're seeing, the record level fires. We're seeing fire zones being changed. All of a sudden, a property is now in a high brush area, or a more unfavorable area, and rates are increasing. Rates are increasing across the board. What can apartment owners or landlords do to make their properties or to make their risk seem more favorable to an underwriter? What can they do? What do you guys think they can do? Maybe Sylvie, we can start with you.
Sure. One of the first basic things from a carrier perspective that we look for when we're being brought a new submission is the look of the property, the condition of the property. It's almost automatic I'm sure Andrew is nodding his head. It's almost automatic for an underwriter to immediately go to Google and, okay, well, let's look at this property. Does it view well? Are there surrounding concerns, debris, or is the property have water stains and rust all over, and things like that makes a really big difference in whether a carrier whether that risk is going to be desirable or not. And we're not even talking about age at this point. We're just talking about the condition, because I've run across risks where, on face value, on paper value, it looks like, wow, this is an older apartment, but I pull it up and it's like, wow, this is impressive. This does not look like a 50-year-old apartment because it's so well maintained. It's regularly repainted, it's clean, it bows well. And I think another thing apartment owners can do is Google your property. Take a look at what reviews are out there about your property. That's something that carrier have been looking into because of the recent significant increase in exposure around habitability claims. Those Google reviews or Yelp reviews, as soon as the words cockroach, bed bugs, it kind of puts a stain on the risk. And as apartment owners, if you're proactive about looking at those and understanding how it's being viewed and addressing those concerns, it is going to help you. It's going to allow for a wider and broader conversation between you and the underwriter, and be like, no, that's not it. This is what we've done. This is what measures and controls I've taken in order to address these. And that can go a really long way.
Yeah. And it's great. We've loved working with Mercury's underwriting team, because, I would say this is probably one of the rarest cases where, insurance companies, I'm being general, and obviously there's not a whole truth to this, but judging a book by the cover, right? Because first impressions do actually matter, because that's what we have to go on. And so what I love about Mercury is when there are some other things that we can add value, or we can clarify, or we can sort of bring some light or clarification to that risk. We've seen a number of times where initially maybe that first impression isn't great, but you guys have come back and said, you know what, we're going to offer terms because of X, Y, and Z that we've been able to clarify. But would you agree with that, Andrew? Is that insurance companies in general judge a book by its cover? What you see on Google?
Absolutely. It couldn't have been better said. We go back to the tangible risk aspect of a property. It doesn't take much or any really skill for anyone to Google the property and see what the reviews are. You're exactly right. I mean, if something as easy as that, just understanding what people are saying about your properties, Google Street Views of the properties, you can really get a good sense of how well maintained these properties are. And it's happened time in and time out where, maybe there are tougher crime areas, and no one's going to pick up their apartment and they're going to move it to a different area. So wildfire and crime scores, you really can't, that's out of your control. But what you can control is the upkeep and the external view on your facility and what people are saying as far as reviews go, because there's been many times where, maybe the crime score is a little bit higher, but you take a look at it, the reviews are all glowing. The property looks great. It's maintained. The roofs are newer. The siding is not stained with any mold or wear and tear. And carriers come in, they're like, yeah, I'll take a flyer on this one. It looks like a good risk. So carriers absolutely judge a book by its cover, especially when they have, hundreds of thousands of units coming on their desk every single day saying the same story. So when it's on us to tell a good story, but when you have the proof to back it up, just using the internet, it helps a lot. So yeah, judging a book by covers is definitely something that insurance companies do.
Yeah, I'm sure we don't want to be known that way, because we want to see the facts, right? But this is it's risk, right? And so Robert Hess, Brett Davis, what are you guys seeing in terms of the carriers, or not the carriers, but where potentially the rates are increasing? What are some of the characteristics where you see specifically where you're seeing either a declined risk, or when I say declined risk, a carrier declining to offer terms, or just automatically they're surcharging rates? Like, what are some of the characteristics specifically? And have you guys been able to how have you guys navigated that to try to get the carriers to take a second look and maybe offer terms where the rest of the marketplace isn't? Is there things that you guys have been able to do in that respect?
Yeah. So some automatic factors would be there's the obvious, like if it has fuses or Zinsco panels and things like that, and the carrier knows about that, that's automatically going to be a rate increase. Certain buildings of a certain size, the certain number of stories, 4 stories and above, those types of things are a little bit harder to write in California, which come with higher rates. But really, that you can kind of approach us with additional information, like what Andrew was talking about, and Sylvie. A lot of the times we know that those Google Street Views are not up to date. They're 2-3 years old in some instances. So if you do take that step and review your building, and you come to us and say, look, these photos online are not accurate. We've done this, and this. Here's the updates we've made. It really helps our case from the original submission. So there are things that we can do when working with the carriers from the beginning and even throughout the submission process to negotiate with the carrier and keep those rates down. So really, I think communicating with us or your broker is huge in those regards.
Good. Anything you want to add to that, Brett?
Obviously the aesthetics of the building play a major factor when the underwriter is looking at the building. But one thing I urge our clients is to also keep proof of your updates, because the carriers will work with you, right? If your building is older but the electrical is brand new, the carrier will look at that and go, well, that's less of a risk for us to insure. So making sure that you keep those updates. I've definitely seen in the past where our insureds have, the electrical is brand new, but I don't have the invoicing. I don't have I don't have any proof of the work being done. And that's hard for us to sell to the underwriter. Whereas if we can go back and say, they've replaced the plumbing in the last 5-6 years, they've replaced the electrical, and we have proof and documentation of that, the carrier it will give you a better rate with those documentations for sure.
That's super helpful. I mean, it just all of the inner workings and all the things that are going on in the background. It's not just, that's the thing about insurance. It's not just, spitting out a rate, especially in today's days. There's a lot of thought. And I think that's really helpful. So, we see this often. What do you guys think? It's when you have an apartment owner who's never had a claim, or maybe had one small incident that occurred, in the past 12 months or 6 months. All of a sudden they have this massive rate increase, right? Their premiums increased exponentially. Why would that be? Why would that be? And can you guys share any insight into that, and what maybe an apartment owner can do to mitigate that, or how to respond to a situation where they all of a sudden blindsided? Maybe they're passively renewing their insurance. They've been comfortable with their broker. They've had the same carrier for 10 years. And all of a sudden it's 40, 50%, maybe even 20%, right? Which can be significant. But why does that happen? And do you guys see that happen often? Andrew, why don't we mix it up a little bit? Why don't we start with you, Andrew, and then we can jump over to Sylvie.
Sure. So there's a lot of factors that can go into it. So it could be that the carrier that you're with is going through big changes internally. And what the broader view of that is experience across the entire book. So it may not be that one apartment owners who's getting the increase took the loss. It's based on the almost like the law of large numbers, where this portfolio performed at X amount loss ratio, so they need to now self-correct it. So because it is still an apartment complex, they basically take a broad stroke and they say, okay, so we're going to take this class of business and we're going to increase it X amount. And then the other side of it is, again, it's increased cost of construction and inflation year over year. So you're seeing this year, it's record highs in both those categories. We're seeing some carriers trying to push 25% on increased cost of construction, because you have apartment owners who are valuing their properties at, whether it's $75 a square foot, $80 a square foot, which maybe 4 years ago people were getting away with. But as the losses trend, they realize, oh wow, it actually costed 2x what we actually listed it for. And with the proper coverages in place, you're getting that, but the insurance companies aren't collecting nearly enough in order to pay for actually assuming the risk. So it's a corrective measure year over year. So now when you're talking about increasing the valuations overall, the premium spend, the rate could be level or as level as possible, but the premium spend overall goes up because now these carriers are taking the inflation, increased cost of construction into consideration. So there's a lot of factors that can go into it, even though one person never had a claim before. And again, it's more of overall industry experience, not just a single asset, which can work to benefit too, because then the agent goes to work and they try to either find a new home for it, or work with the underwriters and show the proof that Robert was talking about, getting the proof of updates. Why does this stand above the rest of the portfolios? Why is this best in class? And use it as leverage over the current incumbent, because a lot of people come out and they want to push what the portfolio is getting, but there's always a narrative to be had, and that's why we work as hard as we can.
No, I love that. I think that was really well said. Are you seeing any specific programs right now that are any like notable programs that are either blowing up or seeing as of late, where historically you maybe didn't see them as the frequency or the severity of these sort of changes? Are you seeing that being more relevant today? And are there? Sorry.
So there are. You guys there now?
Yeah.
So yes, there are. So there's the program. So you see a lot of the changes actually coming out with the standard carriers. So a lot of the standard carriers are coming out and they're saying Travelers is one of them. You have Liberty, you have Zurich. A lot of these guys are increasing the valuations by 25%. Then you go to the program side, where you have some such as a Trisura or a Med James, who they're changing their guidelines based on loss history. So they're going to be limiting the amount of subject that they can write for one building. So, they're no longer writing buildings, frame buildings over 3 million because of a couple large pops. May not be one client who took it, and even though this client didn't take that loss, they say, okay, but there's not a big difference in, tangible physical risk between, your $5 million frame building and their $5 million frame building. So when you're talking about programs that use a panel of carriers behind them, that they have to abide by their rules, that is where it gets a little bit tougher to maneuver. You have, and I was going back to, the Zurich or Travelers, or even like a Comstar, where these carriers are going through their changes, but there is narrative to be had. Again, Comstar would be one of those programs which I know a lot of people are aware of, that have been going through a lot of changes, not only on the property side, but liability side as well, based on the industry losses that they've been taking on certain classes of business, where there's a ton that come into play that, they count as clean, but because they have losses elsewhere, they non-renew. And other people, instead of just completely non-renewing their book, a lot of carriers are coming in with higher valuations. So if they required $85 a square foot last year for a frame building, they're saying, okay, we're going to need $95 a square foot, and the program increased by 12 or 13%. So there's
or even like $250.
Oh yeah. Some of them are coming. Some of them are coming in, costing $300 a square foot, which is probably more in line with what it actually costs. But I think carriers have been doing a decent job understanding no one's going from 85 to 300. That just won't work. So, but yes, it is. People are having corrective measures across the industry.
That's super helpful. Yeah. And if any apartments that are listening in have seen that, either a non-renewal or change, or, with a program carrier, one of these, let us know. This is where we can really help. And we really are trying to stay in the forefront, partnering with Sylvie and Mercury and folks like Andrew at RT, to really stay in front of all of this. What's your thoughts on this, Sylvie? How is this, what are your thoughts on this question and this topic?
Well, Andrew pretty much covered it all. But just to add on to what Andrew said, he's absolutely right. With carriers, we look at it as a portfolio level. We don't look at it as an individual risk. And with that opens up the opportunity, though, if you do have your property is above average compared to the rest of the book, that's a time for you to engage your agent. And then your agent then will connect with the underwriter to kind of outline those things. And there's a reason why carriers have credits and debits. And we want to be able to, we will utilize them for the right risk and the right measures. And then in addition to some of the property rates and lumber and construction has been the hot topic in the last couple of years, given the supply chain changes and demands and all of the economic situations that has resulted because of the pandemic. But I think an exposure that's been undermined or underestimated in the industry is around the habitability. This is a trend that we've seen started in around 2015, and it is a severity trend. On average, some of these claims can go into the millions of dollars in payouts, and that has kind of added that additional layer of pressure for apartment owners, apartment risks, because then carriers are paying out these $1 million settlements, and they would have to increase rates on that end as well. But yeah, pretty much I'm going to tag along with what Andrew said on the portfolio.
That's great. No, I loved how you segued into that in terms of just overlooked or, the habitability, right? Because that is, we're seeing, or maybe I'll ask you, Brett and Robert, are you seeing habitability just be readily available to every carrier? It's sort of a leading question. And what are some of those maybe overlooked coverages that you guys are seeing? And then maybe Andrew, and I'd love to get your thoughts too, if there's any other ones, obviously, that you would mention, Sylvie, just for apartment owners in general, right? There's, I think we see this as we're dealing with this a lot. Is every policy form differs pretty significantly, right, with these legal contracts. And so, are there certain coverages that are you see more commonly being overlooked or not being put in place that you guys would want to highlight, bring to attention?
Typically, if you're a property owner, you have a lender that is going to require certain coverages to be included, and they'll review that for the most part. But there are some coverages that a sneaky insurance broker can keep out without you even knowing, or the banks even knowing. Habitability is one of them. So I can't even tell you the amount of times I see quotes come across my desk, and somebody asking if I can beat that quote. And when you read through it, there's a habitability exclusion. So that coverage is so important, because what happens, if you own an apartment building and 20 units, and somebody is not paying their rent, or a tenant becomes unhappy about anything, and they hire an attorney, that attorney is going to ask, okay, well, tell me what's taken place over the last year. Have you seen garbage in the hallway that took more than a day to throw in the trash? Have you? They'll ask any and everything, and some of the time the tenants will make things up, and the attorney throws that in to the lawsuit as inhabitable living conditions. So if that coverage is not included on your policy isn't triggered, and then you're held liable for that. So I would say that's the number one thing right now, and in California especially. I mean, carriers 2 years ago, it was pretty simple to get that coverage included, but right now you really have to work for it in some cases. There's companies like Mercury and Amtrust, and they have it included, and they have a really broad policy form that includes that, but you have to be really careful, as some carriers are taking that out. And then in some cases, you can add it back in for an additional premium with the sub limit, but it's something you really have to, we read through it on every policy. It has to be in there. It's extremely important. So I would say that's number one.
Okay, it's good.
Yeah, I would definitely say habitability is very important to have on your policy. And we do see a lot of movement in the market this year. We've seen, for me anyways, a lot of carriers leave the state completely. As many owners know, they received cancellation letters or notice of cancellations. And then also they may have a letter that lets them know that it'll say something to the tune of, oh, there's been policy changes in your policy for the upcoming year, but it doesn't explain what it is. And that is them removing habitability. And you'll see and you won't catch it because it doesn't list it completely. And then another really important coverage that we do see a lot of owners like to keep out, because it does have a cost with it, is equipment breakdown. I can't stress enough of how important that coverage is. People see the, $300 or $1,000 additional charge for it. But any type of short circuiting or power surges that happen in your building, you want to make sure that you have the equipment breakdown on your policy. So that one is often overlooked by insureds.
Good. Andrew, anything that you'd like to add in terms of just coverage, restrictions or policy forms that, carriers or program carriers are deliberately leaving out, or ones that the clients just, should have, and obviously budget is part of it, right? We're paying for some of these things, but are there some essential things that you would say, man, this is just one of those things you're looking at two different policy forms. It's just way more favorable.
So, yeah, I would say one of the biggest topics, over the last couple of weeks, we've had all of our industry conferences, is blanket limits versus scheduled limits. And that really dovetails with valuations, because it's a give and take between the portfolio owners and insurance companies, because blanket limits is something just like habitability, which a few years ago, everyone had blanket limits where you could value your property at $75 a square foot, but you get the benefit of your entire, whatever the TIV of the portfolio, the total insured value of your portfolio is. So if you have a $50 million limit, they're not going to tie that single building back to the statement of values at, if you had it listed for 600 grand. So it is a give and take. That is an area where there's a conversation to be had, because some carriers are going to say, if they want to value the building at 95 a square foot, that's not what it costs to rebuild the same building of like, kind, and quality. Nowadays, it costs probably more like $250. So they're saying if you want the blanket limit, there'll be some concession, but we need that valuation higher. We need a little more premium in order to give you that coverage, which a lot of people don't think about, and a lot of people sometimes they don't really care about as well. But we have seen it plays a big factor when that a claim comes through, and you have one building that's scheduled for $500,000, but it really costs $1 million to rebuild. That's where the blanket limit really sees its value.
Yeah. So you kind of explained it, but for those who don't know, because I think there's probably some listeners that don't know the difference between a scheduled limit versus a blanket limit, because we have all these terms, umbrella coverage and things. In the most simple way, can you explain the difference between a blanket and a scheduled limit?
Yeah, absolutely. So, for example, if you have your entire apartment complex consists of 10 buildings, and every building is $1 million a piece. If you have a scheduled policy and you take a loss on one building, the max you will get is what you schedule for that one building, which is $1 million. Now, if you have a blanket policy, then if you took a loss of that one building, you would have up to the $10 million limit to rebuild that building. So in layman's terms, exactly. So some carriers, which we do a lot, and which is for the garden style apartment complexes, it makes sense. We have smaller buildings to be a blanket per location, which is it's achieving the same as what a blanket policy is, because you have if one building is and the buildings are typically smaller in garden style apartment complexes. So if your whole complex is that $10 million TIV, it's not going to cost $10 million to rebuild one of the 10 buildings, but it may cost more than $1 million. So that's why if you have the blanket limit, then you get the value of that location.
And this is one of the most significant benefits about working with a company like Mercury is it is a true blanket, and it's one of the few carriers in the state that do offer a true blanket, and their claims handling practices also acts as like the policy forms, right? Andrew, would you because one of the things we see, and I'm going to throw out a term here that probably most listeners aren't very familiar with, is margin clauses and co-insurance. Can you touch on that and why? Because we're seeing it. I mean, we see these margin clauses where you see a blanket limit, but then you have a margin clause that essentially removes that blanket limit, in these forms. Can you speak to that just briefly? Is that something you see pretty common, and why are the carriers doing that?
Yeah, absolutely. So it is something we see common. So when a carrier does not want, when a portfolio owner does not want to adjust their values because the cost associated with it's just too much for them to bear, we will try and negotiate in a margin clause. So in the same instance where you have those 10 buildings in an apartment complex and one of the buildings goes down and it's $1 million, if we get them 110% margin clause, that means that they would get the $1 million plus 10% max on for the claims cost. So instead of getting that full blanket limit, it's not strictly 100% tied to the schedule. You'll get an extra 10% of wiggle room. But as you can see, the margin clause is significantly different than a blanket limit.
Totally.
Because underneath a blanket circumstance, you would get the value of the complex, whereas with a margin clause, you're still pretty much held to that value plus 10%. Which again, when you're talking $100,000 on $1 million, that's not a ton of leeway. A couple pieces of wood costs $100,000 these days.
Right. And so the moral of the story is just because it's a blanket and you think it's blanketed, it's really important to make sure that every apartment owner understands and has a consultant who can look through these contracts, because that's what they are, to make sure that these margin clauses, co-insurance, that you fully understand it, because at the time of a claim, that's when you want to really avoid these surprises, because they can be extremely, and we've unfortunately have experienced it where clients are calling us and they thought they had, complete coverage, and it's devastating. It's devastating on a massive level. And so, any thoughts for you, Sylvie? I know we kind of derailed there, but in terms of what we're talking about, margin clauses and co-insurance and sort of these. I mean, we've talked about a number of different things, but any thoughts that you have on this? particular
Yeah, I
topic?
just want to add for the apartment owners that only have one building, obviously we're not going to blanket because there's only one building. However, a lot of insurance carriers like Mercury, we do have extended replacement costs up to 125%. And I would highly, highly recommend that be placed if it's a single building, because what that does is it increases your, in the event of a total loss, it increases your, or a claim or a loss, it increases your property, the building limit, an extra 25%. So that gives kind of like that buffer zone. And then just to tag on what Anthony just said, in working with your trusted advisors on the insurance agent side, one of the other things that I would highly recommend for apartment owners to do is when insurance carriers, especially in California, we can share how close a risk is, proximity to brush, fire, things like that. What we saw from a claims perspective, when the Santa Rosa fire happened, when Paradise happened, what have Woolly fire, all of the different wildfires that occurred, when it was time to rebuild, because of the demand surge was over 100%. So in those situations, work with your insurance agents to really like, go, okay, how close am I? How likely will this happen? And if it's one of those situations where your property may be at a higher risk, I would really recommend inflating that building limit, because in the event that that happens, the limit that you have, we want it to be enough. We never want to see our insureds or our clients in a negative situation, and those it's already stressful and frustrating enough. And then when they call the contractor and it's like, well, sorry, that's not enough. That was enough when it was just your house, but now we've got 1,000 houses. So I would, and that again, that's information that your agent can obtain from their carrier partners, and really just can't emphasize that enough.
No, it's great. I love that. Another question for you, Sylvie, are there certain claims, just because you were talking about claims, is there certain claims that Mercury would view maybe more favorably or less favorably when evaluating a risk? Are there certain things?
Yeah. You sure you want me to get started on talking about claims? I'm gonna make sure I hold myself here. There's so much information with claims. So
sure.
When carriers look at a claim, we think about okay, what are frequency claims? What are severity claims? So with apartment owners, frequency tends to be water claims. Severity, you've got your fire claims, and then the new one, the beast on liability is slip and falls and habitability exposures. So with, and we understand that these claims happen. That's why you have insurance. If claims didn't happen, then I don't think we would need insurance. So in those situations, in terms of favorable, not favorable, it just depends on the history of the property itself. But what I can say is a lot of our insureds, a lot of our agents always give us feedback that apartment owners are struggling to find coverage because they've had 3 water claims. For some carriers, that's an automatic ineligible declination type of thing as soon as they see 3 water claims in the past 3 years. With Mercury, we have some flexibility around that, where we have a separate water deductible, and other carriers may have this as well, where it's not something we necessarily advertise all the time, but in those situations where an insured just kind of had their string of, unfortunate water losses, and they've taken the necessary protocols to have better controls in place and remediate the situation, we can apply a water deductible for the risk that's separate from the property to give them coverage and terms, and even alleviate some of that pressure from the premium as well. And I think in those situations, we found it to be very successful with apartment owners. And, I've seen some crazy things that tenants do. Some of them, unfortunately, likes to think that the toilet is a trash can. And, I think the weirdest one I've seen is a plate. Somebody tried to flush down a plate. And so as soon as you have, your bathroom flooded, your 1 bedroom, that's automatically $25,000, $50,000 loss. And that leads to water backup and sump overflow coverage. So definitely all of these things, work with your agent to make sure that all of the coverages that you need as an apartment owner is being addressed. And at Mercury, we've designed some of our coverages specifically to the risks, to our insureds. For example, like apartment owners, our broadening endorsement is specifically designed to have a lot of different coverages that only apartment owners would think would be very important. And so, yeah.
Yeah, can you speak on that a little bit? Because I know you guys do have a broadening endorsement. So yeah,
we do.
Free. Love to hear that.
Yeah, our broadening endorsement is, it's very, very cheap. And there's a couple of coverages on there that I think, 3 or 4 coverages that I think pays for itself. And I'll explain those in just a second. So one of them is we automatically include water backup and sump overflow up to 50,000. There's 3 other coverages that I haven't seen any other carriers include this as an automatic as part of their broadening. And these are, we've had some feedback with agents being surprised that we included these, because with most apartment owners coverage, there's really no coverage provided for tenants, because that's on the renter's insurance. That's something they need to take care of. But our perspective is that our main concern is we need to protect our insureds, which are our apartment owners. And these coverages, we've seen them happen in claims where they backfire and in turn impact the apartment owner in a negative way. So those coverages are loss or damage to tenants' autos, tenants' move back expenses, and tenant personal property. And let me just elaborate on a particular claim scenario just to kind of put it in perspective on, okay, well, why do I need tenant personal property? I could care less, I could care less I don't own them. However, so let's say you are an owner of a 10-unit apartment and a loss occurs in apartment A. And the tenant is like, sorry, I don't have any money. I'm not moving my property so you can repair. But the insurance carrier can't repair it without them moving their personal property. So then the claim gets delayed. And up to a point, a carrier will no longer provide that loss of business income coverage because the delay is not something that we can continue to entertain because your tenant doesn't want to move their property. So with this coverage, we would provide that $10,000. Insured owner, don't worry about it. We're going to move their property for them. The tenant is happy. The apartment owner is happy. We move it, we put it in storage, we do the repairs, we move it back in. So there's, these little things can be such a difference during a claim. And from personal experience of managing these claims, the level of stress our insured had, and things like that. And even tenant move back expenses, we provide coverage for that as well, where if let's say, you have a tenant, their unit becomes uninhabitable because of a claim, and we have to temporarily move them, there's typically no coverage in any apartment owner policy for that. So we would provide that moving expense, pay for that, and then move it back so that you can continue to have that tenant. And then that tenant, obviously in the current situation right now with California, the tenant is not concerned about having to find a new place and paying, really high rent. Then you as an apartment owner, you already know this tenant and you want them back. Everybody's happy. Yeah.
No, that's great. I love what you said. It's the little things that add up, and it really is. And that is a true highlight that Mercury offers. So I appreciate you bringing that up. We're kind of coming to the end of our time. I had so many more questions and just some pretty juicy topics to talk about. I do appreciate it. With our last question, real quick, just high level as we close out, what, and maybe we could start with Brett or Robbie on this one, and we'd love your thoughts, Andrew and Sylvie, is just what should an apartment owner look for when selecting an insurance? What would your advice be to make sure that they have the best solution, the best coverage, the most affordable cost, obviously, but something that they're going to be able to have the peace of mind, someone who is truly an expert? What would you guys advise, and what would sort of those things be looked for? Maybe we'll start with you, Robert, Brett, and then Andrew and Sylvie. You guys want to touch? Would be interesting to hear your perspective.
I think that goes many ways, but it's really our job to direct them to the right carrier. But I mean, something you should be looking for on a policy is coverage. I mean, you don't want to save $2,000 and end up paying for it on the back end on a claim, $100,000 out of pocket. So I would say making sure you're properly covered. The rates, I would also be careful. There are some carriers that give you great rates, and you see it in commercials all the time, and you take advantage of those. And really, the forms are carved out, and there's exclusions everywhere you don't even know about. So I would just work with your broker or whoever you're placing your insurance with, and getting a good understanding of what you're purchasing. Another one is the claims process, understanding that. And your broker should know that which carriers are great with claims, which are going to give you a hard time, make your life a nightmare. So I would say those three things. The pricing obviously is a key point, but a lot of the time we can get you with a great carrier with great claims and keep the rates more competitive than anyone else, even some of these people we're seeing in the commercials. So yeah, I think those would be probably the top three topics to keep an eye on.
Great. Brett, any thoughts?
Yeah, I mean, when you're choosing your broker, knowledge of the space, I think, is the most important thing. You know, as an apartment owner, you're not an insurance broker. You don't know the ins and outs. Some of the verbiage is really hard to explain. So having someone who has knowledge of the space and is able to explain it to you. And then, one thing, I think Robbie alluded to the commercials. If you see something that's too good to be true, it probably is. I know a lot of members get mailed in things that say, for your building, we can give you a premium for $1,000. And that's just not the case, unfortunately, anymore with insurance premiums where they are now. And if it is, there are exclusions. They may be valuing at your building at $70 a square foot, whereas if you do have a loss here in California, prices are looking anywhere from $250, where if you're in Los Angeles or San Francisco, $400 to $450 a square foot is what some people are getting contracted out for. So just, the knowledge of the space and being realistic with the expectation of, if it's too good to be true, it probably is. So.
Yeah. No, I like what you said. I think having someone who you trust is key, and someone who's a true specialist, who has the relationships, who has the cloud, who has market access. Right. And we do, that is something that we do. There's not a market that we do not have access to, which is huge. And we have those strong, I think one of the things we truly believe in, and I've seen you, Brett and Robbie do this, is just, it's how you treat your underwriters. And Sylvie could probably test to this, is like who she wants to work with. She probably wouldn't say it in live stream, but it matters. It matters. And how we conduct ourselves and what we do, we're in this as a team, and there's a lot of things that go on in the background. And so it's, having that best friend or cousin or, brother-in-law that is your broker is great, and relationships go a long way, but it really is having someone that's a true specialist that matters a big deal. Andrew, did you want to close out? Any thoughts on that you want to add?
Yeah, I mean, they hit the nail on the head.
Italian brother.
You guys hit the nail on the head. It's all about picking a strong partner, like a Golden State, where you get out what you put into it. So the all the info is going to be there, but it's going the extra mile to really put together the most comprehensive submission and give our underwriters a really good presentation on what the risk is. Anyone can throw a couple applications together and send it off to an underwriter, get it quoted with, like we were talking about, poor terms, maybe poor terms, maybe good pricing, but it's all about the terms at the end of the day, because, at the end, insurance it does improve the value of everyone's, enterprise. That's what we do. We're here to help you guys. And you're only as strong as your partner. So, getting the most knowledgeable partner, to be with you and out in the marketplace, especially as the market is getting harder and harder, to fight on your behalf is crucial. That is the most important thing.
Yeah. Especially when you have a surprise, you have a claim. There's nothing like all of a sudden your insurance broker who you hated becomes your best friend. But no, that's a great point. Sylvie, any closing thoughts on this? Anything you wanted to add?
No, just tagging along everybody. But I think everybody already hit it on the head. But it's you're absolutely right. If you're working with an agent and the only thing they're telling you is go with this insurance because it's the cheapest, they're not adding value. As trusted advisors, they are there to provide value and explain to you why beyond the price. That's the coverage that you need for your risk, for your specific property, and challenge them on that. And if they can't deliver, then to Anthony's point, we recommend finding someone that's an expert in the space, because apartment owners, the exposures that you are faced with in regards to your livelihood, in regards to your business, is not as simple as a, personal auto policy.
Right.
Yeah.
Yeah. Much like, when you select your attorney or when you select your CPA, you're selecting someone who is a true specialist in that space and someone you trust, someone you fully understand. And that's generally, how I would like to, how we see our clients select us and what they're looking for. So again, I want to just thank you guys. Thank you, Sylvie, Andrew, Robert, and Brett for attending and taking this time out. I feel like it truly was a value. I think there's a lot of things we can talk about, and we appreciate your time, appreciate your expertise and your knowledge. Jeff, thank you so much for allowing us to be on. We appreciate you and love our partnership with the Apartment Owners Association. You guys are truly first class, and your level of professionalism is unmatched. So we appreciate you.
Hey, Anthony, we have a ton of questions here.
Okay.
From the people. I hope some of you guys can stay on.
Yeah, sure.
So little transition. You have the scripted questions. Those were amazing. And everyone, I'm just glad that we have as many people watching as we do, that this will get out there, because there's a lot. I mean, does everyone know about scheduled limits? Does anyone, are people aware? It's nice to be able to open up the hood and see what's under, see what the motor looks like, see what's really covered and not covered. And so thank you guys. I think that was really valuable for everybody. And so I'm just always so happy when we're able to put our members in a better place to succeed. And I feel like you guys totally do that. And just with what your presentation so far. And then I loved your sneaky insurance brokers quote there. I just had to laugh at that.
Which one was that?
Oh, you were talking about the habitability exclusion. And, so I just want to mention it to everybody. Guys, habitability is a big old deal, and it's going to become bigger. And we do have in-person seminars, Michael Brennan in November. You're going to want to be there. And so he'll talk about habitability in multiple locations. We also have Zorn Windrich. He was a LA City code enforcement, whatever you call it, officer. And so he actually helped set up that whole system, but it's not LA code, it's California code. And so if you're watching and you're in San Francisco, code enforcement is not different in San Francisco. The building code that we're talking about is a California code. And so he has a couple videos we're going to be putting anyway. So he'll be doing some in-persons as well. And we're going to be covering the top 14 most commonly violated codes. And it's a 3-part series actually. And so you'll want to make sure you're aware of what is going on and that you keep those things in check. Even you guys talking about keeping don't judge a book by the cover. Wow. I mean, you do judge the book by the cover, wow, keep the thing up. We've had we've educated our people too. We have a live stream on how to protect your property as violent crime spikes. And a big part of that is cleaning up the trash, repairing the locks, making sure the front looks good. And, every morning I get out there in front of our commercial building here that we work in, I'm sweeping up the trash, even out of the gutter, right? Because just keep the whole thing looking good. And so anyway, there's so much here that everybody learned from. And, I don't know, because you're you're more just in the Zoom here. You probably didn't realize it, but before this started, we were showing some slides of different giveaways for the trade show. And we just listed, there's like 20 different vendors that are giving away $100 plus in different things. But can you tell us about the giveaway that you have, Anthony? Like
Absolutely.
If they come to the trade show at the Long Beach Convention Center, what are you giving away? I think it's green.
It is green. It is green, and it has 2 zeros. So for apartment owners that are above, what is it, Brett? How many units? You're muted.
I think it's around 30 units, right? Or
no, I think it was less than that. I think it was 7 units, 7 units or more.
Okay.
For above 7 units, the below will do something for as well, Jeff. But for above 7 units, if you bring your declaration page, which is the first couple of pages of your policy, ideally you have your full policy with you. But if you bring your declaration page and you get a quote from us, we'll give you $100 if we cannot beat your policy. So obviously, that's not the goal. The goal is we really want to show you the value that we can add, and it is something we've done with the AOA and as a partnership to you as members, sort of a gift, if you will. But really, the goal is bring your declaration page, and we will demonstrate by doing a free risk analysis for you, where we can improve upon that. And so we'll have a raffle, and you have a chance to if we can't through that win $100. So that is the deal. So bring your declaration page, put us to the test, and allow us to really demonstrate what we can do at the show. So we want to see you come by and say hello. Even if you're happy with your broker, if you don't have your declaration page and it's a larger portfolio, that's okay as well. We'll still honor that. Bring us your declaration page, and we're happy to show you what we can do.
And then also something for workers' comp, is that right?
Same thing on workers' compensation. There's a threshold on that because there's minimum earned premiums, but your policy form, if you have employees, that's something we can pretty much do across the board. For the ones that are being charged literally the minimum amount, there's not a lot we can do there. But I would say for any apartment owner or property manager or landlord that has multiple employees, it's at the very least I would say like 3 employees. It's something that absolutely we can do. But for some of those smaller folks, if you're at that minimum threshold range, there's really if you're paying, I think, what is it, $1,200 Brett is the minimum, $1,800, $1,400 depends on the carrier, I guess. With State Fund, I think it's like $800.
Yeah, some of the carriers they kind of go back and forth with the minimum earns. I think the lowest that we're seeing now is $800 to $900, but then when they do the audit at the end with like State Fund, it gets a little tricky. Yeah. Usually it's around $1,000 to $1,200 is the minimum.
But we'll honor it, Jeff. It's something that we want to do, and we want to, again, we want to keep your broker honest, so to speak. So put us to the test, allow us to demonstrate what we can do. And, there's really not a market we don't have access to. And so again, at the end of the day, we want to improve upon your portfolio. We want to make sure that you have the best coverage. We want to make sure that you have the best comprehensive solution, and that there's no surprises. So we will be there. Looking forward to it.
Awesome. So that's Long Beach Convention Center on the 27th, and they'll be real close to the AOA booth that's at the center. And so, so you'll be able to find him pretty easily, and you'll be speaking.
That's right. Brett will be speaking, and I believe someone else. I'm trying to pass the reins because I think people are sick of hearing me talk. So I'll be up there though, for sure. So.
All right. So we have a ton of questions. Let's get to these, and let's just try to answer them rapid fire best we can. Mary, can an owner get legal support during a claim and also loss of income a claim until the property is ready to be rented?
Not sure I totally understand the question. Robbie, did you want to take this one?
Yeah, I'm on the same boat as you a little bit. So,
Can
yes,
an owner get legal support during a claim and also loss of income during a claim until the property is ready to be rented?
yes, that's how it should work. Again, it entirely depends on the scenario, but your business income coverage um, should pay for your loss of rents during, say you have a flood or something's going on the property. You should either have actual loss sustained, or your carrier should know what your estimated rents are for the year, and you can sometimes include more than a year. But yes, when tenants are not in there paying the rent they're supposed to, the carrier should be stepping in and helping out with that. As far as legal support, yes, that your liability coverage should step in and provide legal help if needed. Again, that's entirely based on the situation, what happened, and how it triggers the policy. So I don't want to just automatically say what's going to happen. But
Yeah, I think that's well said. It depends on the legal support, right? Because there's probably some tenant maybe discriminatory issues or some things that aren't related to the actual covered peril or the covered claim. Like if there was a fire, it's not related to that. That legal support, would be outside of sort of the scope. But generally, the way that insurance policies, particularly with admitted policy forms, is you have a covered peril, and there should be once there's an assigned adjuster, and if there's some sort of loss that is covered, you should have. The thing about business income is what people don't realize is there has to be a triggered loss. So if there's not a loss, like we had an apartment owner, they were very phenomenal apartment owner, right? They own probably 6,000 units across the country. They had a claim and they had some vacancies in some of their other units. So what they did is they took all of those units, all of those tenants, and they transferred them to all of the units that were still available. Well, that was a loss of income on those particular units. And there was a lot, there was hundreds, right? Because of that fire. The carrier, because there wasn't a loss, because they actually moved those tenants. Now, we were able to help them facilitate this, and we worked with the carrier. But generally, the carrier stance on that, if there is no loss, they can legally have the response to not cover that claim. And that's why it's so important to have these little nuances to make sure you have the right broker to represent and make sure that limit those surprises. But generally, yes, that's how it should work.
All right, there we go. So Veronica on YouTube, if a permit is not obtained when required by a city, and then there's a loss associated with the unpermitted work, can that cause a denial of coverage?
Great question. That one's a good one. It sounds like somebody's actually gone through and had, I'm assuming, a contractor that wasn't permitted. So technically they're not actually a registered contractor in the state of California. I don't think so. If you have a covered peril, and the work is done by someone who is not licensed, you still have a triggered loss. So I would, unless there's some sort of wording in the policy form that specifically excludes that, generally, Sylvie, you're nodding your head. Would you agree with me on this?
I would. My only thing is I don't want to encourage unlicensed contractors, because what that does is it has ramifications to your policy after the loss. The loss is based on peril. I'm not aware of any policy coverages in the industry that actually has that as a specific exclusion. But what happens is that then when your policy is up for renewal and your carrier finds out that you're hiring unlicensed contractors, it can lead to potential non-renewal, or you may have a harder time finding coverage because that loss would actually show due to unlicensed or what have you. They're going to ask what the details of the loss are. And that can also aggravate a habitability loss as well.
Yeah, and to add to that, the goal in all of this is to keep your claims history as clean as possible. So when you have work taking place at your property, there's a it increases the risk of something happening. There's actual work being done there. So people could be, falling off ladders, or somebody could be working on a pipe and flood your house, whatever might be happening. The benefit to working with a licensed contractor is they're bonded, they're insured. And each time you have somebody working on your property as a building owner, you should be asking them to provide a certificate of insurance naming you as additional insured to their policy. So where if they cause damage while working on your building, that should fall on their insurance policy, which in turn keeps your claims history clean and keeps your rates down moving forward.
Correct.
So I would say the number one thing is if you're working with a licensed contractor, to make sure that they are adding you to the policy. It's kind of like a get out of jail free card if anything's to happen. You have that, and you could show, no, this is your responsibility.
Yeah, absolutely best practice for sure. We've had situations where someone had a contractor who they thought was licensed, and they weren't. They found out they weren't, and this particular person didn't actually have to pay for the entire contract because of the fact that it went to court. So that was a whole nother situation. But yeah, we absolutely recommend that they be a licensed contractor for the work being done.
And if people have done some building and not reported that to their insurance company, that's not going to be covered, right?
I mean, the carrier forms are going to follow what's covered. So, right, like if you added a building or any property at that, don't just assume your carrier knows and that's covered, right? And that goes for anything. That goes for changing locations, that goes for changing legal entity names, that goes for adding employees, that goes for adding vehicles, that goes for really anything. So any sort of operational changes, you really do want to make sure that you notify your insurance broker so that they can properly advise you. Also with claims is also another. We just saw one where it was reported, there was a claim that was reported a certain way. Yes, it was covered, but it was covered under a specific way because it was reported that way. And if had they gone through their broker at the time and had their broker process that claim a certain way, it would have been handled and covered a certain way that would have been more favorable to them. So there's just a trillion nuances to these legal contracts. But anyway, you kind of want to take insurance out of it because it is insurance, but there's so many legalities and nuances to it that it is very complex in its nature. So, yeah.
All right. And do you assist duplex and single family resident landlords?
You want to take this one, Brad?
Yeah. Any rental income property, we can provide a home for you. Definitely, you make sure that you're clarify. I know some people, if they live in the unit, say it's a fourplex, and you live in the unit, definitely something you want to let us know, because some carriers do provide discounts for having an owner on the premises, whereas some want to change the policy form where it's written as a homeowner's policy. And there's actually some enhancements for that, as you can raise your liability limit higher under a homeowner's policy than your standard landlord policy. So any rental income property, we can provide a home for you.
Great. And thank you for mentioning that, because that was actually one of the questions that we have here. So I'll just eliminate that one as far as if they're living in one of the units. So you just covered that, which is great. George on YouTube, there are so many variables in insurance policies. What are the bare bones policy for a single family residence rental? So that might be a tough question to answer, but you want to give a swing at it?
A bare bones, most of the policies is, your standard DP3 landlord policy. That's going to cover you for your building. Other structures is going to be included, business income, medical payment. There is no coverage for the tenants items, but there is business personal property also included. The lowest you can usually get for that is about $4,000 to $5,000. And that'll cover you for, your refrigerator, things like that. So those are typically the bare bones. And, I think after the meeting today, bare bones is typically not the best way to go, right? You kind of want to stay away from the bare bones. So those are essentially the bare bones of a landlord policy.
Right. if you're going to go bare bones, then just have a lot of cash on hand so that
Yeah.
you're
Yeah.
insuring yourself. So, all right, Bill. I currently have 4 properties besides the individual free policies. I am looking for an umbrella policy. Do you have a recommendation on how to proceed? Thank you. Oh, for individual fire policies.
Individual fire policies, so property and liability for the 4 locations that he has. Okay. Yeah, I mean, it completely depends on the building characteristics. We're more than happy to take a look, obviously, but yeah, I mean, we work with any and every market that's available in the state of California, and we know them all really well. So just based on those specific characteristics, year built, number of stories, number of units, we can direct you in the right direction and get you the lowest possible rate for sure. Feel free to send you over your deck pages or any building information. We could take a look for it.
And then one thing with the umbrella, it's important to have the underlying policies and the umbrella with the same broker. Not so much the same carrier, but the same broker, because the way that the umbrella works is it triggers after your underlying limits. And what I've seen is some people have, only $100,000 on their underlying policy, but their umbrella only picks up after $300,000 in the loss. And if you don't have the same broker that is managing the policy, that is something that could get overlooked, and you could be out, a few $100,000 before your coverage actually picks up.
That's a phenomenal point. We generally we would be doing a disservice to you if we covered one or the other. Candidly, we would recommend you actually move your other lines if you wanted to keep it with another broker. Like, for instance, if you had an umbrella with another broker, we would ask that you actually move your other lines to them to avoid any exposures, to protect you and us, because that's one of the most common areas we see where someone does have a claim or they have additional coverage that they've added and it doesn't get added to both policies where it should be. And there's a massive gap and there's an error. And then all of a sudden there's people pointing fingers and you don't have coverage. And so it's absolutely 100%. It's imperative that, having really one select broker for all your commercial needs is in our opinion, essential, just to make sure you have a comprehensive, one eyes. It's not, in the same way you wouldn't have, 2 different attorneys, handling, maybe you have a team of attorneys, right? But you wouldn't have 2 completely separate law firms covering one specific thing in that legal issue, right? We really want to make sure that there's, unless they're working together, unless they've, collaborated, which is generally, in our case, it's just best practice. So great point, Brett.
All right, Carl on YouTube. On triple net, including the roof properties, what type of insurance is necessary for the owner of the building to have? So let's say, like an example they give is a McDonald's. So as the owner of that kind of a triple net property.
You want to take this one, Robbie?
Yeah, so the triple net lease is going to dictate most of that, but a lot of the time what you see is the tenant, for instance, McDonald's, every McDonald's you go into is very similar. They do their own improvements. They have no problem covering the building itself and the tenant improvements. So for a business owner, you typically would need your liability coverage handled. So, there's a lot of people walking in and out. You want to be covered for liability with a very high umbrella unit, because a lot of things can happen in the parking lot and, inside that property. So, again, I've seen triple net leases where the tenant is not required to cover the building in a roundabout way. So just covering that lease or reviewing that lease with your agent, and it will help you kind of determine what you should be looking for there.
All right. And George, where can I find the names of all those insurance companies? So George is looking for Mercury.
Yeah, he's looking for the names. George, if you want to call us, we're happy to. I mean, part of what we, what we like to do, it just there's thousands, right, of insurance companies. And so it really just depends on your specific unique situation and your demographics for your portfolio. And so what we would do is if you were open to it and you wanted us to take a look and go to the market for you, we would share with you all of those markets that we have approached. But it's a good question.
Okay, let me see. Will, do any of your panelists work with out-of-state carriers for coverage? We have apartment in Memphis, Tennessee. Would
Great
any of the
question.
panelists be able to shop insurance coverage in Tennessee for us? Thank you.
Absolutely. Yeah. So we are licensed in all states. We have affiliate offices throughout the country. Mercury is a national carrier. Andrew's firm is a national carrier, candidly an international carrier, program underwriter. And so, yeah, there is not a state, maybe one or two that we don't have a client in. So 110%. We could do a segment of this for each individual state. But we do have a team virtually every state, and we understand the nuances. And you mentioned Memphis, so 100%. We absolutely can help you. So give us a call, shoot us over your information, and we'd love to show you what we can do.
Great. All right. Michael, does habitability coverage include lawsuits from tenants who bring their own bugs into the apartment, go crazy, don't allow treatment, and then sue? Oh, Michael, man, I feel for you because you got one of those.
Yeah.
I can take that.
Okay.
Michael, I'm sorry for what you're dealing with. But unfortunately, that's very hard to prove, especially if whenever we see what we're seeing with habitability claims is attorneys are extremely creative. And what they do is when they file the suit, they don't just pinpoint bed bug because they know that a carrier can then, fight against that. They'll throw in the bathroom with the kitchen sink and the entire garage, everything, so that even if, let's say, 10 gets thrown out and 5 sticks, the claim or even the lawsuit proceeds. And unfortunately, also with habitability claims, what we're seeing is that what these attorneys are doing with the clients is that they purposely do not notify the carrier until a lawsuit is filed. So they have an upper hand in terms of being able to control the timeline, and carriers are at a scramble trying to find, as well as the insurer trying to find the right defense. So in those situations, what I would recommend from an apartment owner standpoint is do regular inspections and have that documented. Our insureds that have been able to leverage and win these allegations, win against these allegations, are those that are very well documented. They know when a complaint was called in. They know when the contractor was sent. They know when the repairs were done. They have a regular maintenance of pest control. They have regular maintenance of this. So at that point, then when the jury or the court sees that, they see like, wow, we have a really responsible business owner and can document everything, then it makes it harder for the claimants to prove that the apartment owner was negligent. So
That's great. And, we do have property management software. It has a work order module in there. So when the tenant, they can make a maintenance request through their tenant portal, and it shows up with you, and then you can work with that and keep that documented forever. And so some of you may have a good system, your own system in place already. If you don't, you may want to consider getting on the software. It's you just go to the AOA website, go to member benefits, and there down at the bottom, you'll get a link to that. And just document everything, right? Okay, when I make a claim, am I required to use recommended insurance contractors, or can I use contractors that I normally use? And will they be paid?
Yes. Yes, you are not required in California. There are anti-steering laws. A carrier cannot make you go with the contractor that they recommend. There are some benefits to that. Usually when contractors are part of a carrier's direct repair program, they tend to have, they're on a regular monitoring, whereas they have to be able to meet the timeline. They have to be able to address the damages, and there's a much smoother conversation. But again, it's not required. And yes, they will be paid up to, the carrier owes for what is reasonable for the industry. Now, for example, the industry is at $250 a square foot to repair something, and your contractor is at $1,000. They have every right to charge $1,000, but it doesn't mean that the carrier owes for the $1,000.
Yeah, great. Very well communicated there. All right, Virginia, thank you for your question. How much umbrella liability insurance do I need to cover 2 rental buildings that have no mortgages? I was told I need LLC on each property, and my lawyer said I don't need the LLC, but a good umbrella policy, insurance policy.
You need $500 million in limits, nothing less. Just kidding. It just depends. Really, it's a great question in terms of how much in limits, and we get this a lot, and it really just depends on your portfolio. It depends on your exposure. It depends on your assets. It depends what we would recommend. Budget is also part of it. We can look at claim scenarios. We are seeing some catastrophic claims that are driving some of those numbers up, but also, the umbrella marketplace the rates have gone up significantly. Whereas historically you could get, umbrella policies, pretty high limits for very, very inexpensive. And now, I think the carriers are realizing and seeing, and you could speak to this, Sylvie, is, they're no longer just freely giving away millions and millions of dollars in limits. It really needs to, they're really being, I would say, prudent and wise about how much that structure is. But we have a number of programs that are specifically designed for apartment owners, exclusive programs that can do that. And yeah, ultimately, the point about an attorney advising about the LLC or non-LLC, I would definitely advise you to speak with them legally. But I would say to that, it doesn't, whether you have a limited liability corporation, an S corporation, or an individual, it's not going to prevent a tenant or any third party, candidly, from filing a legal complaint against you. That being said, there is some separation, right? It does separate that entity if that entity is, owned by a separate tax ID number or trust or what have you. But to that attorney's point, we see it all the time, right? Oh, well, I have a limited liability corporation, so I don't need coverage. That's just not true. It does not limit, someone from actually filing a legal complaint. Would you agree, Sylvie?
Absolutely. To me, those two items are almost kind of very different from each other. One is talking about coverage, and the other one is talking about your business structure. Yeah. And so I think reviewing that separately, because from the umbrella standpoint, that's an exposure to me. That's a coverage that needs to be reviewed for your particular risk. But then I think that's something else in terms of the LLC and everything. I don't think they're mutually exclusive of each other.
Right. That's a good question.
All right. Well, Michael, thank you, Anthony, Sylvie, Robert, Brett, Andrew. Very informative and worthwhile. Hope you have time for audience questions. Okay, yeah, I didn't read the last part of that. Guys, if you like this, if this has been helpful, give it a like so that it kind of gets out further, and even better, share it with some of your friends who also own property. And we'll just keep going here. Scott, what is the suggestion for invasion of privacy and harassment coverage limit for single family resident rental units? And that's more of a terms of the lease type of a question. And so, yeah.
Invasion of privacy and harassment coverage. Probably, Brett, you guys want to take this one? Any thoughts on it?
Yeah, some of the single family homes and fourplexes, usually on the personal line side, you'll see like a sublimit of invasion of privacy or wrongful eviction coverage. When we're talking about the apartment buildings, for anything with the harassment and discrimination is definitely a growing claim that we're seeing a lot of. We do have carriers that provide a standalone discrimination policy, and that's going to be the best way to cover yourself. As far as limits, they usually start at around 250,000 and they go up to $1 million. And those policies usually have a $5,000 deductible and cover you for $1 million in defense costs. So really, again, that's going to be budget of what you can afford for a single family home. Always check your underlying policy to see if that coverage is there or how it's worded. And if it's not, we can help you out and provide that coverage.
Sylvie, you guys added to your policy form, if I'm not mistaken, not too long ago, tenant discrimination, an actual endorsement. Am I remembering that correctly? Like within the last 3 years, I think, or maybe it was pre-pandemic, and there was an endorsement added. Am I off? There's a tenant discrimination coverage that was added. Brett, don't leave me hanging here. Brett, do you remember, right? Is this right? It's included.
I know that they have an EPLI rider that you can add on. That's actually very cost effective for what you see out in the marketplace.
I think that's what it was.
They do have a rider that you can add on. Yeah, I think that's what you're referring to.
And it's very inexpensive. It's like $500
compared to what a standalone EPLI policy costs. It's pennies compared.
And it was introduced, I think, just like recent, like not very long ago.
Yeah.
Yeah. Does that?
You're not referring to our advertising and personal injury. Right?
No.
Okay. No, is this something different?
It's something different. It is actually discriminatory coverage.
The only one that I know of is the one that Brett mentioned is through our third party partner.
Yeah.
Okay.
No, it was a huge benefit. Actually, a lot of the carriers, there's a lot of carriers that aren't offering that coverage. So yeah, this is something for sure that you want to make sure you see you have coverage for, because this is a going issue, an ongoing issue where we're seeing discrimination claims for pets not being protected, or they are protected. We're seeing discrimination issues, and they have through the Department of, and I'm drawing a blank, but they call them shoppers, and essentially will call you as a tenant or as a landlord and ask you. Jeff, you're nodding your head. It's the Department of.
It's HUD.
HUD. That's right. I'm sorry, I forgot the acronym. But yeah, HUD is looking into this, and this is something that's extremely important to make sure that landlords are not discriminating. And so this coverage is we're seeing a lot of it, even the small tedious ones in terms of whether it's family size or race or a pet. I mean, there's so many different things that they are really cracking down on to make sure that so making sure you have the proper coverage is essential.
Right. And I'm nodding my head just because during COVID, they kind of limited their activity, and they've just recently in the last few months, they've been ramping it back up. So there's going to be, there are those secret shoppers that are out there, and hopefully that everybody is doing things the right way and not discriminating and being a good landlord.
Right.
And anyway, so definitely be careful. Okay. So Eduardo de la Torre has a great question. And is there a different, here, I'll read it. I have a building of 4 units. I can insure it long-term tenant with a short-term tenant like Airbnb? And so maybe to ask the question, is there a difference in insurance coverage if it's long-term versus short-term Airbnb?
Yes, that's a great question, and it's something you want to be really careful about. A lot of carriers are not a huge fan of short-term rentals, so they have exclusions on their policy. For obvious reasons, if you're Airbnb, you're likely on vacation, you're looking to have a good time, things can happen, as opposed to a long-term tenant. It's their home, and they take care of the space, and they respect the space a little bit more. So there are carriers that are very competitive still, that low rates and provide short-term rental coverage. But you do want to be careful that if you are doing that, whatever carrier you're with, let them know. If they can't write it, they'll give you some time to replace coverage. But very important that you are transparent with the carriers on that front.
And then also go ahead.
I think he was asking if an insurance company can insure a long-term tenant, a tenant that's long-term with a short-term
if they're
policy on the same building. And I don't believe so, right? Because the policies aren't covering the tenant. If I understand the question, Eduardo, if you want, you can call us and we can answer this question for you. We can have a dialogue.
Cool. Thanks for
specifics
that.
There. Yeah.
And then also just hopefully everyone is aware of the different regulations around Airbnb and how that even varies from your location within California. So there's state law, then there's also more stringent local laws on that. And they don't want you to take your apartment building and just Airbnb the whole thing. And so unfortunately, I know people that are doing that in other states and just doing really well, but that's not even a possibility here in that way.
Yeah.
Unfortunately. Okay. All right. Everybody, here's Kristen. Do most policies have a part that covers a suicide or violent death in the building? What is the difference between additional insured versus interested party? 2 questions there.
I'll let you guys take this. I know Andrew, I know you have a meeting, so I think.
We'll wrap it up. This will be the last one and we'll be done.
Okay.
Yeah.
Brett or Robbie, you want to take this one?
Yeah, so your liability coverage covers you for things like that on the policy for the most part. So I've actually seen a pretty terrible loss along these lines, and it was a couple having a fight, and for whatever reason they tried to leave out the window, fell down the fire escape. Nothing the landlord could do to prevent this. At all. It's not their fault. However, because it happens on your property, you could get brought into the lawsuit. In this case, the party that fell worked at Google, very high income executive, and was severely paralyzed afterwards. So it was almost $100 million claim. And as long as you have the correct liability policy in place, as well as an adequate umbrella, you should be covered in those instances. So there is coverages for that, and that's what your liability policy should be there for, is catastrophic events that can get out of hand quickly.
Yeah. Thank you for that answer. And I know, Andrew, you got to go, and so we'll let you go ahead and bounce before we, as we're wrapping it up. If you need to go, feel free. And thank you again so much, all of you. Thank you so much for sharing your expertise with us, all your experience, all your knowledge. We really appreciate it. I'm just so happy with what we were able to provide for everybody today. And again, so thank you guys. Don't forget, next week we have Dennis Block talking about I believe it's a writ of execution. And then the week after that, it's writ of execution is Kimball Tyree St. John in 2 weeks. And with Dennis Block, it's never let a good judgment go to waste. And anyway, so lots of good stuff coming up, plus a trade show. Meet the guys at the show. And hopefully, definitely, you have to come say hi to me if you come to the show.
Yeah.
And again, thanks everyone. And
thank you, Jeff.
Thanks,
you
Anthony,
so
for putting it together.
Yeah, no, we look forward to the next one. This is something I think we want to do on an annual basis. At the very least, is having adding to our expert panel. And if there's questions that are specific that we can would like to expand on, we welcome those. And again, thank you so much, Jeff, and your team. Really appreciate you.
All right. Thanks, guys, for the good questions, too. Everyone out there. We'll see you next week. Bye-bye.